Now let's move on to the markets with Charles. Despite gains posted by industrials today, the NSE ended the week in the red. Charles Fakrogha is standing by to talk through the day's trade. Thank you so much, Charles, for joining us. I think the big news this week, of course, has been GT Bank's announcement of a 25 kobo dividend. And let's start with that. How the market reacts to this, and do you think there's any merit in paying interim dividends at all for investors? Does it sway investors in any way? Because if you look at the yield on the interim dividend, is much less than 1%.
Yes, the GT has a tradition of paying interim and final dividend. When their results came out yesterday, they are half year, and they said they are paying 25 kobo interim dividend. Investors were not too swayed by it because we saw the share price of GT coming down yesterday. It is today now that the price is coming up. I think GT should have done better than what they did by paying 25 kobo, but their profit after tax came down a little bit for this same period this year. But at the same time, they should have been able to make their investor a bit happier by paying more than 25 kobo. So this dividend they have paid, the interim, did not in any way actually make the investors to rally more for the shares of GTB.
So is there any incentive for GT Bank to make that payment at this time? We know, of course, there's a cost of paying money at this time, so they could might as well delay the payment until later on in the year. Why do you think that GT Bank, and I think Access Bank also has that tradition of paying interim dividends?
You know, you see, it has become their habits, and over time it has been good for them. But this particular one for this year, because we had other banks who did the same thing, but those banks paid more in terms of interim, and they will pay less in terms of their final. So investors are looking at the situation where GT will have announced maybe a payment of 90 or 1 naira as interim, then pay a final dividend of 25 kobo. Okay, so just the other way around, that will have been able to make the investor to perceive that they are getting more value for what they have been giving. But an interim dividend of 25 kobo, and later on, of course, we don't know what they're going to pay as final, did not sway the investors at all.
Well, I imagine that long-term investors in GT Bank have come used to that cash flow at some point in the year. But let's move out of the banking sector for a little bit and talk a bit about Cornerstone Insurance. I think they have an interesting story to tell, and maybe we can focus first on the level of activity in that stock since the company reported its half-year numbers. We're beginning to see an improvement in the company's performance after quite a few years of decline.
Yes, generally the insurance sector is like it's coming back to life. A lot of regulatory awareness is going on as to the importance of insurance to the average Nigerian. So when Cornerstone came out with their figures, in fact it was good. And for today we are seeing a huge demand. The bid was so high for Cornerstone. At a point in time it got to full bid. That is the highest price you can go for today, 59 kobo. This is the stock that has been doing for 50 kobo for quite a long time, and today it's doing 59 kobo. It goes to show a renewed interest of investors generally in the insurance sector. And you can also see that other insurance companies follow suit. We also see mutual benefits also that has been doing 50 kobo for quite some time, is now about 54 kobo. ICO, the same thing, Massad. So we are seeing a renewed interest in the insurance sector as a result of awareness of what these insurance companies are doing. I'll give you an example. Mutual Benefits is doing a lot of restructuring into so many businesses, and investors are beginning to see that these are stocks they can get into and begin to wait for the benefit in the nearest future.
All right. I think what makes the likes of Cornerstone quite interesting is the fact that the downside risk is very, very low, because these are stocks that are trading very close to their par values. So your thoughts about the appetite to actually consider some of these investors, some of these companies, as even if just for the speculative opportunity for investors to get into these stocks to see what they can get from any rally that may materialize after the results are released?
Yes, I think I agree with that. I share that view. The stocks are doing quite close to their par value, and a 1 or 2 kobo increase will make a huge difference for even long-term investors, because they have seen it doing 50 kobo for quite a long time. So if they get in now at 59 kobo or thereabout, and with this improved performance, they see a little bit of interest again. Of course, some short-term investors will take advantage of that and exit to come back later again.
All right. Let's move out of the insurance sector now and move to the If you can, very quickly, just highlight for us your thoughts about Dangote Cement. Of course, the largest company on the bourse. We've seen the results recently, a little weaker compared to last year. Your take on Dangote Cement?
Yes, I think investors should continue to be very loyal to Dangote Cement. The company has done so well, even if the numbers that are bringing for this period is not so good. Investors should remain loyal to them. And I think it's a stock for investors to get into to balance their portfolio.
All right, Charles, let's leave it there. Enjoy your weekend. Charles Fakrogha, dealing clerk at Foresight Securities, reviewing the trading day in Nigeria.